Y'all on level 1, I'm level 3. Pounding on the table for my team. Every night I flex. I'm making big moves. That's a big move. Big money, big moves.
I'm going to start off, and then I'll get into the speakers. I know you guys probably don't want to listen to too much of what I'm going to say right now because we have some amazing speakers who are well-versed in some of these names. But I kind of want to just start with some intros and, get into like why we're doing this. And I like learning more about people as well because I feel like FinTwit, you have a lot of people talking behind accounts and you don't really get to know them. So I'll start and I'll open it up slowly. So just a little bit about myself. My name's Rahul. I've been on Twitter for some time, and I definitely want to start with giving a shout out to Pounding the Table, just because they've been super engaged with me, helping me, and just someone that I've looked up to as I kind of engaged more on Twitter, a podcast that I've followed and learned a lot from. So I definitely give these guys a follow. Avi's a co-host, so if you guys have questions, definitely ping his way. Tony's one of the founders there as well, so he'll be speaking. A little bit about myself and investing style. I've been investing in stocks since maybe 2013, I think, my first stock purchase. So it's been quite some time. And I've been investing since then, pretty active on Twitter lately for the past couple of years. Style of investing is very growth oriented. So I like buying stocks and holding. Some of the oldest stocks I hold are Apple, Microsoft. Again, it's not the coolest or most sexy names, but they've done good in terms of returns, right? I bought Apple in 2015, Microsoft 2018. I own all these three stocks as well, so Square, SoFi, and Affirm. Actually, the tweet that I have pinned right now is exactly what kind of brought the idea in my head when I started seeing so much chatter about fintech, and I realized that I actually own all three. Affirm being the most recent one, so it's not like I got in super early. I want to make that clear because a lot of people try to talk about stocks and the timing they get in, and not everyone's perfect, right? This one I learned about a little bit more recently. I got excited because of the partnerships and new products they have. So that's how I got into Affirm. I own Square, and SoFi I actually owned since IPOE. So I actually got a little lucky there because I didn't even know what Chamath was gonna actually acquire or merge with, and it ended up being SoFi. So that was one of the few gems of the SPAC craze. And yeah, so I think that's a little bit about investing style. I will like the speakers to, before they get into the tickers, just to talk a little bit about your investing experience because I do think that's helpful. And because some of us are traders, some of us are investors, some of us are invaders, as Tony likes to say, who trade and invest actively. So I think it's important the crowd to understand that. But without further ado, I'll like to start with Brad to talk about SoFi. And Brad, why don't you start with introducing yourself? Like I said, talk a little about investing style. And the way we'll do it from format perspective is we'll give each speaker, a good 10 to 12-minute slot on talking about the ticker. I'll obviously ask a question. And then once we're done with that ticker and company, and again, the other speakers, you guys can chime in as well. We'll move on to the next company. So the order will be SoFi, Square, and Affirm. And then Reilly will kind of round it up with Marqeta. Yeah, Brad, I'm going to hand it off to you now.
Yeah, thanks for having me. Excited to talk about SoFi, or I guess as the commercials say, the company helping us get our money right. In terms of who I am as an investor, I tilt very, very long-term thinking. I'm definitely a high growth investor. I look for disruptors. I like to hold them for a very long time, and that's just kind of where I fall in terms of philosophy. But moving on to SoFi, because there's a lot to cover. There's two core segments to talk about: business to consumer and business to business, and they have active roles in both. So for B2C, they're building this a little bit cliche one-stop shop super app for digital banking with the ability to borrow, save, invest, and spend. Their first product was their core student loan refinancing, and they kind of pivoted in 2018 as they decided to kind of build out the rest of his product suite and become the super app, and more on kind of why they did that later. But the products are designed to be better together. You get Bitcoin rewards for making a timely payment on a loan. Loan and money bundle offerings give really low rates and really compelling APRs. The company is really determined in the B2C segment to be at the consumer side for every single major financial decision. So in order to do that, they need loan products, they need investing products, they need everything that the consumer may need. And they're really trying to build loyalty and be that go-to financial resource. So when someone thinks, oh, I need a loan, or oh, I need to maybe be a little bit more involved in the stock market, they think, oh, SoFi. So this has two really positive benefits. The margins are pretty good in terms of a company that's supposed to compound at above 40% for a very long time. So they're at a 5% EBITDA margin already, a 33% contribution margin. And before the IPO, or I guess before the de-SPAC, not the IPO, they had a 6% net income margin that became deeply negative because of all the going public expenses that they're dealing with. But it's a very profitable business model. And the example that they highlight in their investor presentation is one money product gives them $250 in revenue with a 34% contribution margin. And then as soon as they bundle that with a loan product, that contribution margin spikes from 34 to 80%, and revenue goes from 250 to 2,300. So they're really trying to cross sell and boost that LTV as much as they possibly can. And what that enables them to do is take an extremely aggressive stance in terms of marketing. So, I mean, we all see the SoFi Stadium. I like to talk about it and the concession discounts. I'm sure all these commercials from SoFi are stuck in our heads with the catchy songs and all that. But also what this enables SoFi to do is pass a piece of incremental value onto consumers in the form of lower rates. So again, better together. And it uses all these it uses all these proceeds to fund faster product iterations. So the most recent example that they gave from their quarterly earnings report is they cut their time to loan by 50% year over year with 30% higher approvals, 60% conversion rate. So all these iterations are coming from the fact that they're cross-selling and generating all this LTV, and that allows them to market more aggressively, and that allows them to do all these wonderful things in terms of product innovation. And so that is really why I favor this super app approach from the B2C standpoint. In terms of success, they're having a lot of it. So product growth accelerated from 121% to 123% year over year. That was the 7th consecutive quarter of accelerating growth rates. Membership, exact same thing. And these are not small numbers. I mean, they sold they have 3.66 million products in circulation. So triple digit growth is certainly nothing to kind of turn our nose at. But despite all of this, there's still the concern that fintech and digital banking and neobanks, all of these services are going to become more and more commoditized. I mean, they're talking about building a super app and saying they're the only one who's built it. I bet you in a few months, Square's going to have that super app, and Revolut's coming to the United States, and they're going to try and build a super app. And there are so many of these competitors that are going to try and do the exact same thing as SoFi is. They've had fabulous success with the consumer segment, but the real kicker and the real reason that I like SoFi so much is as we're moving on, a good transition into the B2B segment. So last year, SoFi acquired an API vendor, so API application programming interface. Just think of this, if you're not familiar with the term, as something or pieces of software enabling core functionality, and in this case, within digital banking. So this was a complete and utter game changer, in my opinion, and is what sets it apart. So Galileo, as of right now, provides payment APIs, so payment transactions and processing, and they do so for several behemoths in the world of fintech. So I'll just list a lot of them: Chime, Robinhood, Dave.com, Moneyline, Revolut, and the list goes on and on. So what this piece of business ensures, despite the commoditization that I'm kind of anticipating going forward in digital banking, just like we saw over time in legacy banking, is that this ensures that SoFi is growing as all of these brands, these loved brands within the world of fintech grow. SoFi collects, or Galileo collects, I should say. These two businesses are run as independent entities, so I shouldn't be calling it SoFi. But Galileo collects variable commissions per payment transaction, which means as Robinhood onboards new users, which whoever follows that company, I know they're onboarding a lot of new users. They don't just grow as they add new clients, but they are growing as fintech proliferates and as these brands are growing. From a success standpoint, from the B2B perspective, revenue for Galileo was up 138% year over year to 45 million. Still a little bit small in terms of overall makeup of the company, but it's growing. 22 partners at the end of 2020, and that has now, as of last quarter, skyrocketed to 41. They've never had a partner leave Galileo, or they had one partner leave before SoFi purchased it, and since SoFi purchased it, none of them have left. But there's two. Okay, so another thing to talk about, moving on from those two core revenue segments, and another thing that I'm kind of excited about that I think will help set it apart is the anticipated bank charter that SoFi has received conditional approval for. So it issued a debt offering initially in the amount of $750 million. That was the amount of liquidity it needed to shore up this charter. So it was kind of People connected dots saying, okay, they're raising 750 million. It must be that it's imminent, and it pretty much is. The Twitter accounts hinted at it. They've hired the new president of SoFi Bank, who was a former USAA president, so it's probably coming. But just kind of highlighting advantages of getting that coveted bank charter. So it removes the inherent cost of capital advantage that legacy banks enjoy over SoFi, and then it creates a cost of capital advantage over other fintech companies in SoFi's segment. So it removes one hurdle and creates another hurdle for SoFi versus other competitors. So other advantages to highlight, so no more loan financing through expensive warehouse facilities, again, lower cost of capital. The state level regulation on lending, meaning 50 different sets of compliance rules, becomes federal level regulation, which means they're only regulated by the FDIC, the Fed, and the OCC. The mortgage business, the cap on volume by state is lifted, so they're really kind of unhandcuffed in terms of how many loans they can originate in the mortgage segment. SoFi will now be able to hold loans on its balance sheet. And the most interesting thing, I think, from this is SoFi is going to have the freedom to provide an interest rate on their checking and savings account that it determines rather than being assigned by what's called a sweep partner. So going back to this first idea of really, really high LTV, so SoFi can pass some of this advantage onto their consumers and give them a more competitive rate in their consumer checking account or their consumer savings account. And that just feeds the whole idea of products are better together. And the last thing I want to talk about, there's so much to say about SoFi, but there's three other awesome speakers, and I don't want to cut into their time too much or at all. But Anthony Noto, we have to highlight the leadership here, because in 2018, Mike Cagney, who was the founder, he was fired for kind of hosting what was referred to as a frat-like culture. So the company almost sold for $8 billion, and then Noto was hired to kind of right the ship. Just a quick run through his resume: Army captain, co-head of TMT at Goldman Sachs, former CFO at Twitter and the NFL. So he's a superstar. And not only was the resume really fitting for this, but his vision for SoFi is really why I like him so much. So he pivoted the company away from this core student loan product. So this one product that they were offering, and that was emphasizing volume at all costs and aggressively burning through cash. So he got that to profitable unit economics. He got it to a positive contribution margin, and then he embarked on building this super app with all these products to borrow, save, invest, and spend. And he did so using the student loan product and some of the SPAC funding in order to do this. So he also saw the value of the other reason I like him so much, if you couldn't tell I like him. So he saw the value of integrating Galileo and created this inherent business to consumer edge in a space where competition is so fierce, because what he's doing is saving on these hefty third party fees that Galileo is charging to make SoFi even more of a low cost provider. And also what it does is all these fintech, these companies that SoFi is servicing, they all need sponsor banks. And now SoFi can step in and serve as that sponsor bank with Galileo and with the banking charter. So 2 more minutes. I'm going to go super quick. So what's next for SoFi? The B2C segment. So buy now, pay later is coming to Latin America, according to Noto, thanks to Galileo's extensive presence there. Credit card rewards program was just launched. They just launched their invest product in Hong Kong with the ambition to launch it throughout Asia thereafter. They're expanding aggressively into Latin America in the business to consumer segment, because Galileo has this large presence in Latin America. For B2B, so SoFi is in the process of building new Galileo APIs beyond core payment functionality. So it'll be interesting to see what kind of uptake there is there. I mean, it's kind of looking like SoFi wants to push Galileo and its service offerings into Plaid and some of these other B2B API providers for fintech. So it'll be interesting to see, again, what kind of traction is there. In terms of competition, it's hard to say that SoFi is going to pass Cash App, are going to pass Venmo in size. And I don't really think that matters. 50% of consumers use more than one bank. The vast majority do so because of inadequate service offerings under one roof. So there's a lot of room for these really convenient super apps to step in and instill a new level of utility and a new level of convenience that legacy banks really haven't been offering to this point. And I know there's Zelle and all those things, but if you compare a Venmo to a Zelle, it's not all that close. So yeah, that is SoFi, and I've talked for 13 minutes now, so not too bad. And I will pass it on to the next speaker.
Yeah, no, thank you, Brad. I think that was amazing. I know you were trying to cover a lot, and you hit on some amazing points and some things that I'm certainly very bullish on. Especially the Anthony Noto transition, the banking charter. By the way, I don't know if you mentioned this, but I get super hyped every time I see SoFi Stadium every Sunday, and the fact that the Chargers and Rams are crushing, it's amazing, and they're hosting the Super Bowl as well. And I also think there's a lot of the points that you highlighted are definitely exciting about the company. So thanks for that, Brad. I don't want to pass off to the next speaker without asking you a question, because I'm sure there's questions in the crowd. And I didn't mention this initially because we have such a packed lineup and we have a lot to cover. I don't know if we'll have Q&A at the end. So what you guys can do is try commenting on the most recent tweets, so the ones about the space being live, and I'll try to pick out some questions if they really stand out and something that I think is worth asking. But I can't promise a Q&A just because of the fact that there's a lot to cover, and we do have some people have different obligations, and we don't want to have the space last too long. But feel free to comment, and I'll try to capture some of those questions. But I will ask some questions along the way as well. So one question before we move on from you, Brad. And again, thanks for covering this, because I do think there's so much that SoFi has, and I think that's kind of my question, and maybe you did cover this a little bit. But the one thing I notice on FinTwit or just the financial community is that SoFi is now looked at like Square or Coinbase or Affirm, right? They're looked at kind of like that second child almost, right? Even though they have a lot of these innovating products, good management, they have that bank charter coming up. So what do you think? Will put them at that upper echelon of fintech? Like, what do you think it takes for them to get there? And what's your opinion there? And I think part of it was highlighted in the case you kind of shared, but I'd love to kind of hear that a little bit more, just because I feel like that's probably a general consensus, if I'm not wrong.
Sure. No, I totally agree with the little brother sentiment for sure. I mean, SoFi has 2.7 million members, and I think Cash App has over 70 million. So I really like the company. I'm anticipating holding it for a long time, as long as there's no abrupt change. And I still don't think that it's ever going to be as big as Cash App or Venmo on the B2C side of things. I mean, Cash App and Venmo are going to grow well beyond 70 million members. So there's a very, very long runway of growth, especially if growth keeps accelerating every single quarter. But there's a very long runway of growth for the business to consumer side of things to get really big and provide really hefty shareholder returns. And I think that's going to happen. And I still don't think it's going to approach Venmo or Cash App in size. So that's kind of where I see things.
Awesome, man. No, thanks a lot, Brad. And if you guys have any questions, again, like I said, please post them. But just for the sake of time, I know Brad's, kind of hit on the time limit we kind of set, trying to give everyone 15 minutes. So thanks a lot, Brad. I know you covered a lot there. And Brad also has a newsletter that he shares. So please give all these speakers a follow. I mean, they do some great work. I wouldn't have invited them if I didn't think it would be worth kind of having the conversation with them. I've learned a lot from them, and I do think they share some amazing content. The next one is a very special friend and someone that I've interacted with a lot. As I said, he started pounding the table with Avi Mash, who by the way, he jokes around a lot. Will always come on the mic and say, "Follow these guys; they're so smart." And I call him Mr. Sass. He's actually pretty smart himself. He just jokes, fools around a little bit, and kind of plays the nice guy off. But give Avi a follow as well, along with pounding the table. I mean, look at the way he self-plays even now, right? He didn't join from his own account. He's joined from the handle. He's all about community and building and doing this as a team. So that's like probably one of his best traits, I think. Besides his hosting capability, which maybe I'll take over if I get better at. But Tony, so before you start, please, Avi, you gonna say something?
I was gonna say I didn't know about that last part, but go
ahead. So Tony, before you start though, I do think you have a very unique investing style. You've come up with this term about being an invader, right? So can you talk to us just a little bit about your background? Who is Tony? Tony, kind of the king, and kind of your investing style before you get into Square, which is, I know, one of the head of tables in Pounding the Table.
Absolutely, Rahul. Happy to be on. This space is crushing right now, so I'm very excited to chat Square. Yeah, so my name's Tony. They call me Tony or AO, whatever you guys decide. So I've been investing for probably like close to the last decade, mostly just in stocks and options. But I am, like Rahul said, an invader. So that's investing and trading. Most of the time, I'm usually just finding what companies I like next that'll be my long-term investments. But I do trade around to get more capital in order to buy more long-term investments. So that's definitely my style there.
Awesome, Tony, man. That's awesome. That's good to hear. This invader style is definitely something new to me, but like I said, I'm more long term. But I do really like that because I see you are staying up to speed with everything, but at the same time trying to share with the community what you think is happening currently as well. So if people want to trade on it, they can. So yeah, Tony, why don't you kind of share with us, what excites you about Square? I know you have some crypto ties there because you want to touch on coin because there's a lot going on there. So why don't you talk like a little bit on it? And I mean, if there's anything I want to jump in on, I will happily.
Definitely. I'm going to start with like a higher level overlook here, just because I think that, we're covering a lot of names here. We've got Square, SoFi, Affirm, MQ Coin. There's so many different fintech companies coming out right now. So it's very much so this like, like Web 2 was and Web 3 is now. It's this fintech revolution that we're seeing. We're getting transactions that are happening all over the world all the time, the internet globalization of trade and everything. So we're really seeing that these ecosystems are being built more and more, especially to benefit the users, right? I can't wire money on the weekends, but I can send you money anytime on PayPal or on Square or on Cash App or Venmo or whatever. So those are the kind of things that we're moving towards as a society and in the future. So definitely all these names will probably have a different role in that ecosystem, right? Because even today, when you look at like traditional banks, you've got so many different banks doing roughly the same thing, right? But there's so many different pieces of the pie, right, to split between all these names that we have tagged in the title of the space, even, right? So just thinking about that, that's why I guess we're having this space. It's like we're bullish on the fintech ecosystem moving forward. So just talking about Square here, I know I'm sure a lot of people know this. It's actually Head of the Table at Tying the Table. So that's a podcast that we do, Avi Mash co-hosting right here every week. So I actually got to interview the CEO of, or one of the co-founders of Square. So that was very cool, and I have some like very cool insights from him that we also shared on a podcast that we can pin that in here, Rahul, if people want to take a look at that and hear from the co-founder himself. But basically, Square is a commerce ecosystem. So all these different companies right now going out in fintech are trying to create this ecosystem, right? Because once you can get people in to start paying for things, you can provide services to all those millions of users, right? Like PayPal, Venmo, Cash App, 70 million users. That's a lot of people to make money from while they're doing a bunch of transactions every day. So looking at this higher level, we've got this like democratization of finance going on, and commerce is going to continue to push economies forward across the globe. So one of my favorite things to think about with Square, just in the beginning of Jack Dorsey, and he's trying to turn really Square into this commerce ecosystem in like the loosest sense of that word. And I love the fact that he's always looking up to people like Musk, and I think like Musk is obviously one of the greatest visionaries of our time. And he regularly listens to Elon's conference calls, and it just seems like the way that he's taking Square right now, it's becoming what Elon would have turned PayPal into, is just a money system where once money comes into the system, it doesn't have to leave, and that's it. And you've seen that with a lot of Square's cool developments recently, right? Like they had filings for those financial services like banking, savings, and checkings, right? So they're kind of trying to be this one-stop shop for your payments ecosystem, right? Like your online wallet. And I think that with this democratization of finance and like we're able to actually store and hold our own money in various different ways, whether it's crypto, whether it's fiat, and we can trade that between Cash App and Venmo and stuff. So those are kind of the themes, I guess, that we're running forward. And I think Square is like very much so in the top echelon of this already, right? Like we've been talking about this name since well under 100, and it's come so far to the point where they're now making $30 billion acquisitions.
But before you keep moving on, Tony, I just want to highlight the one thing I really caught there that was super interesting and something that I don't know if everyone caught on, because one thing I give feedback to Tony on all the time is when he gets excited, he just he's speaking so confidently and just like, oh my God, so much content coming your way. But one thing he highlighted is each of these names have something they're going to be doing in the future, and they're going to be connected to like that future of fintech. And I think that's really important to understand because we all have different investing styles. I said mine at the beginning. Tony said his. Brad talked about the way he thinks about SoFi. So I think it's important to understand, right? You have to do what's comfortable for you, right? This is not a stock pitch show. This is not a stock pitch space. We're trying to talk about companies that excite us and why they excite us. But then at the end of the day, it's your decision on what you want to do and what you want to invest in, right? You have to stay true to yourself, and you have to enjoy this. Like you have to have fun cheering for that company, right? Like I like the companies I'm invested in. It's not just about making money, even though that's the ultimate goal, right? Is to maximize your ROI, but you also have to like the management, believe in them, and have that kind of faith in their vision, right? And something that Tony always says that always is in the back of my mind is like, um, you know, can you spell out like what the next innovation for this company is going to be, right? So like about like the whole concept of innovate on what's being innovated, right? So like how's this company going to continue innovating, right? Because that's what growth is. Growth is about constantly kind of finding ways to grow. And I think, like you mentioned about Square and coin becoming this whole new kind of Tesla or that type of name, right? So, Tony, why don't you just talk a little bit about the whole crypto landscape with Square, because I think we all know Square's a solid name. It's already $100 billion plus company, unlike Affirm and SoFi. This is a bit more mature of a company. It already has multiple legs. The one thing though, I do think that certainly had me bullish on Square when I bought in was the fact that they were in crypto pretty early, right? They got in. I think they're
Right.
one of the few companies that actually truly institutionalized crypto, and Jack has been very clear and in the forefront about that. And I know you're very bullish crypto. You were calling Ethereum last year, I think, at like $300. You were in it before that too, but I think even just in the whole downturn in 2020, like you never kind of got away from crypto, right? You were like always there. So can you just talk about like what Square does next from here with crypto, and also like just the whole, like, again, I don't want to talk about NFTs too much just because this is not the point of the talk here, but I do know that's gonna connect somehow with crypto. So just kind of go into that a little bit.
Yeah, definitely, Rahul. So I think that's such a good point to bring up, just because if you're thinking about the financial revolution, right, this fintech revolution we're having, it's going to go in chapters, right? So we see money coming out of those like traditional banks right now, going into things like PayPal, Square, Affirm, MQ, and then you're going to be seeing that money continue to go into things that are also focused on crypto, right? So coins getting massive inflows of money, which means that like crypto is going to get massive inflows of money, and the system's becoming more and more mainstreamed and democratized, and people back it so it goes higher, right? Like these cryptos are all based on usage to some degree, right? For in terms of price movements. But I do know that like because Jack Dorsey is so huge into Bitcoin and he's a crypto believer. I mean, he's tweeted about it so many times. He's been a buyer of it for a long time. They own it on their balance sheet, and they're already doing those kind of transactions, right? Like the new Square point of sales. So Square's got all these different like hardware and software services. But the fact that they're already incorporating that with crypto right now is a very, very big step, right? Because I think the gap will continue to bridge closer and closer over time. And then you'll just see these companies that can do a myriad of things, right? Like have these multiple heads, as we always talk about, will continue to dominate. So Square is definitely pushing forward in the meantime there. And then I know that they've done a lot of recent acquisitions, right? So just besides the fact that they already have these, 30 different softwares, hardwares, financial service products, like Seller includes managed payment services, software solutions, hardware, and financial services. And those are products that are offered to sellers. And then you've got like Square for restaurants, for retail, the developer platform, virtual terminal. You've got Square Card, e-commerce. You've got appointments, invoices, payroll, customer engagement. And then they just bought Credit Karma Tax. So they're going to be adding tax filing system to their ecosystem. Weebly, so it's website building. And then they just acquired Title. So this is like another thing that we've talked about a couple of times. Title and Jay-Z's on the board of that. It's basically like merch for artists, maybe buying tickets. So like thinking about the fact that Jag is so into crypto, and then you've seen Coinbase has rallied so much talking about having this NFT marketplace, right? Title would be the perfect way to bridge crypto and NFTs and provide a marketplace on Square where they already have like 70 million people there like doing transactions. So at the end of the day, it's going to be a lot of these different companies offering very similar products, right? Like you see Shopify is doing it as well. So there's no reason for me that Square is getting very similar to that Shopify vibe, and all these companies will eventually, right? They're getting to that. They offer a way for you to sell something, a way for you to pay for it, a way for you to manage that. Like that, this is just how that companies work, right? Facebook, like Google, Amazon, they're all the same. And so knowing that this is like the next wave, whichever ones like check those boxes, they're ones that I'm very interested in, right? And so I think Square is definitely doing that. And one really, really, really like focused thing that I want to talk about here, when we were interviewing Jim McKelvey, who's a co-founder of Square, he was saying
One
that,
second, Tony, before you continue, because I don't want to forget this is, by the way, it's actually pinned. So if you guys haven't
right.
listened to that pod, it's actually pinned right here. The pod that Tony's going to talk about right now, because he interviewed the co-founder of Square.
Yep. And he was, I mean, just such a bright guy. But he was just saying, and this is something I'm sure a lot of owners of Square wonder, right? Like they have phenomenal sales, like a lot of transaction volume. They're doing 19.04 billion, 21 billion the next year, 25 billion the year after, right? So they've already got such a huge base of revenue to come and get profits from. But the issue now that people are saying is, well, their EBITDA is going to go from 1 billion to 1.4 to almost 2, right? So yeah, they're going to double their EBITDA in the next 2 years, and their revenue is going to increase by only 25%. So if you're looking at the pace of growth there, right, like this company is broadening out, And that'll just allow for more acquisitions, and that'll allow for, you can take on way more debt when you're making that kind of profit, and you may not even have to. And of course, they just bought Afterpay, right, for 30 billion. So that's why I think the stock's been kind of like, lagging for a little bit compared to a lot of the other growth flyers like SE and, some of those other names that people track a lot on FinTwit that they consider, Square in the same category for. It's just digesting market caps, in my opinion. But I think that's a fantastic deal for it, right? You're going to be able to do buy now and pay later, which I'm not going to talk too much about just because that's the next thing coming up. But back to what Jim McKelvey said on the interview, he said Square is making so much money in so many different ways, and we're focusing on getting that market right now in any way that we can, because there's a million things that I can go into a board meeting right now and say and just turn on profits. And he's like, that's not the goal right now, right? So this is very much that Amazon stage of building. And those are always the favorite times to be in my opinion, because that's where maximum ROI comes from. And like, relative safety, just because it's already, a couple $100 billion market cap and crushing. So that's definitely like, one of the main things I took away from hearing that is that while these companies and these analysts can predict things right now, the people who are really at the table making the decisions actually have like a lot more information in terms of where that company is going in the future. So it's very, very huge to hear that. So yeah, definitely check out that interview and hear it for yourself. It was just very eye-opening. Like I'm surprised he was able to say that to us.
Yeah, no, I mean it's that interview. That's amazing that you guys actually had the chance to speak with him. And yeah, this all this kind of reaffirms all the stuff that I believe in Square about, and what I've kind of enjoyed learning more about the company, and why I think I'm excited for the future. And I'm glad you brought up the title acquisition, because I don't think a lot of people really dove into that. So thanks for kind of bringing that up again, Tony. One thing I did have a quick question on, because I think you hit on a lot. But before I kind of move on, again, I know I'm cognizant of time, but I don't want to move on without this, because you talk about it a lot. I know there's some always chatter about it on FinTwit. How does this all tie in with the Web3, right? Like, are these, I mean, these businesses are not going to get replaced, or are they? I mean, again, can you just speak to that very high level? I don't want to turn this into like a crypto NFT kind of show, but I don't want to kind of move on, because fintech, I think, is the biggest beneficiary, or one of the biggest beneficiaries, with this new kind of innovation that we're seeing in front of our eyes, which I know you've been in the forefront of from the very beginning.
Right. So, I mean, this is one of the really cool things, and why I'm still, it's like it comes to this like paradigm shift, and you're wondering which companies are going to be able to like innovate as fast enough to keep up with the new changing times. But knowing that Square has squarecrypto.org, right? So they're working on projects in the same way that Coinbase is going to be working on crypto VC projects, and they want to be creating the next stage of the web, right? Which is Web3 and online wallets, right? Like your crypto wallet, your fiat wallet. So they're creating those kind of infrastructures, because eventually this is not as mainstream as it will be soon, but all these things will become very much so mainstream, and having that infrastructure needs to come from a place that's essentially centralized, right? So Square, Coin, and I mean SoFi has Bitcoin as well. There's like other companies that are going to be more and more involved in it, and I just think it's because this is the way we're going to be transacting in the future, right? So knowing that the banking system's obviously got issues, right? Like if I can't send money to you every day all the time without having to wait 3 to 5 days because my money is actually not sent to you, it's in two places at once because of the banking system. Or if I have to send you a wire and someone has to manually input and check that wire out, or cash a check, God forbid. So like those are things that are going to be edged out of time, and we're going to be just having pretty much all digital transfers. So these are the horses that are going to be leading that charge. And so I think that's definitely, I guess, where I stand on that, because someone has to build it, and it's definitely the people who have the most users and who are already showing signs of being interested in the space and wanting to innovate it.
Yep, innovate on what's being innovated. I love it, man. Thanks for answering that. Yeah, I don't want to keep kind of going into Square, just because, like I said, we want to kind of keep going through. We have a lot of names, and I know people are super excited. But thanks for sharing that, Tony. If you guys want to hear the Square interview, it's pinned in this tweet right here, right on the top of the Spaces. And give Pounding the Table a follow if you want to listen more about some of these names, or listen from Tony a little bit more. I think Avi's been demoted to my intern. It sounds like he just pinged me. So
Coffee boy, not even intern. One day.
all right, yeah, spell my name correctly at Starbucks. So yeah, before we kind of go on to the next company, I do want to kind of introduce Francis, who's actually been someone I've connected with very early. He's been super supportive in my growth on FinTwit, just kind of contributing to the community. But I've loved a lot of content he shared. I'm gonna pin his tweet I think this is honestly one of the best threads ever written on Twitter. It's the buy now, pay later thread. It's right here on the top. So here Francis is out, and then definitely check this tweet or this thread out. But Francis, before you get started, like I said, can you just introduce yourself a little bit? What's your investing style, and just a little bit about yourself before you kind of jump into Affirm.
Awesome. You're being too generous. Thanks a lot, Rahul. It's been great meeting you as well. Getting to know you over the last couple of months and just seeing your growth and on FinTwit. No, thanks for having me again. Really appreciate the opportunity. Yeah, I mean, a little bit about me. I think I've been with FinTwit here for probably over a year or so. Primarily, my background comes from I have a business degree, studied a bit of finance, economics back in university, as well as I worked in data analytics. I was a product manager for analytics and data science projects for a financial institution. And I did that for over a year. And right now I'm back in the field of economics right now. So that's a little bit about my background. And yeah, I enjoy technology, high growth investing, and with obviously certain caveats that go around that. Yeah, so I'll just go into my talk. This is about Affirm. I think with Affirm, buy now, pay later has been a huge trend, probably over the last week, probably one of the most biggest trends on FinTwit over the last couple of weeks here. But in summary, I mean, there's a lot that I could go over, and my thread has all the information you have available up there. But I think the main thing I'll just talk about is Affirm. Like, why does Affirm have why are they in a pole position to maybe win or maybe be one of the key winners within the buy now pay later, and why can't they get destroyed by the some of the other fintech companies like Square, right? Square is a great example. Square is now merging together with Afterpay and connecting that whole ecosystem and loophole system, and that's going to create quite a powerful combination against the firm, right? And so there's a big topic to say, but what differentiates a firm? And I think the way I'm going to go about this talk is, first of all, for anyone who's new into the buy now, pay later, you need to, if you're trying to understand the competitive advantage of this industry, you want to understand it primarily for what's the incremental value the consumer as well as the merchants get, and how does a particular buy now, pay later add incremental value and continues that on it's more about the durability and sustainability of that value creation for both. It's a two-sided network, and that's what determines a buy now pay later success. And for a firm, I think this is the best way to capture it. So think of a firm in 5 ways, and this is how I'm going to go about my talk here. It's a firm is technology, so think about tech, data, risk, brand, talent. Okay, that's how I'm gonna go about Affirm: tech, data, risk, brand, talent. So let's go over tech. And this goes back to the bear case about Affirm. It has no modes. It's a commoditized product. Okay, so what differentiates them? I think the way, and this is how I view Affirm, I don't view them as just a buy now pay later. I think they're they're specifically focused on more of a technology payment solution, and this is primarily how I see that. Go back into my thread and listen to that definition, or you could go back and watch the investor conference. Mark Levchin, the CEO, defines them as a software defined, data preserving, vertically integrated network, right? That's a mouthful, but primarily what that just means is a firm is a data provider, and so that means, and they're vertically integrated, so they control all aspects of the ecosystem from the app, right? They have an app where the user goes in to make a purchase, or they could find deals or promotions on there, up until they provided payment infrastructure, the modeling, the risk, and everything up until the merchant gets paid the final money and the whole system is completed, right? And so there's a full vertically integrated tech ecosystem about a firm that actually quite differentiates them. and they control quite a huge, a significant amount of data. And this goes to my second point on the point of data. And so Affirm is one of the first, they have a first mover advantage in North America, as many of you might know, right? This is right after the financial crisis, of just a few years afterwards that Affirm was founded. And what this has actually allowed them to do is they've gathered a huge, significant amount of data on the North American consumer over the last decade, over a 10-year period right now. And what that's really allowed them to do is they've really become like this payment checkout solution, like par, par excellence, right? And so what that has led to a result too, and you guys could read more about why Shopify chose them. But in general, they've become so good at the payment solution that they've any solution that actually picks a firm, you're gonna get ideally a 50% increase in your average order value. So right, you're incrementally driving sales for those merchants. You get 28 less cart abandonments and over 30% improvement in speed, right? And this is all due to the data and understanding what the consumer wants at the checkout solution. Additionally, and this is a new product the firm launched a few weeks ago, a firm checkout solution, right? And with this, and you could check out the data from what they found is what merchants are also seeing with this new solution that customizes people's purchases is there's over 26 increase in cart conversions, 22% lift in approvals, and over 20% increment in sales. So just to summarize this whole piece here, and then there's also the third piece, just very quickly on this data point, is Affirm also has this unique SKU data that they get, right? And this is the scanner KU data. And this is a very, and I have this more details on this in my thread. But this is a unique data set that only the product manufacturer, the merchants are able to get. And this is a particular network that it's a data set that bypasses Visa, MasterCard, Marqeta, any of these network solutions don't receive this data. And what that's able to do is allow a firm to uniquely partner up with a merchant, right? So a merchant going forward, and this is why you have all these deals with Target, Walmart, and the rest of them, is they don't have to go through a particular network provider to give particular deals. And so all of this data is just allowing a firm to just become way better at lead generation, conversion, and brand support for every merchant. So if I was selling a new business, I could allocate some of my marketing dollars towards a firm, right? And so, and this is huge, and this is huge, and this is why merchants are flocking to this buy now pay later solution, because if my business is struggling and I need to find a way of actually improving my sales, I could actually develop this solution. A third piece, I won't go into too much of detail about this, but I'm doing a write up on this is risk. Affirm, they've because of how much data and how much emphasis they put on improving their risk models, they have one of the best delinquency and risk modeling currently in the industry, right? And you could even see this from their last earnings report where they had like a 40% less in loan provisions over the last year. So they've become really good at managing risk because, and this is a bear thesis that many people have against them. Brand recognition, we know they have an NPS of 78 right now, as well as over, and I don't know if many people haven't seen this data, but it was actually in the investor conference. They actually got a 70% year-over-year growth in a firm's brand awareness. That's actually happened. That this is past the past couple of months here, year over year. So the brand, and this is the name that many North American consumers think about when they think about a buy now pay solution. Similar to people in New Zealand or Australia, they think of Afterpay as the key. And so I think this brand name is a huge winning point for them. And then the fifth point, talent, is just the remarkable founder that you have in Mark Levchin, right? I don't need to go into a lot of details, right? But he was the technology mind behind PayPal, right? Extremely brilliant guy, and also has a 91% Glassdoor rating, highly charismatic, eloquent as a leader. And particularly going back to my very first point, he's positioning Affirm as a technology, a data software solution, right? And I think this is so important to understand how he's thinking about the company and how he wants to differentiate them, you know? So just to kind of, I guess, this last 2 minutes here of wrapping up, because there's a lot I could talk about, but I just found the best way of capturing this is think of Affirm as a tech data software integrated partner, first mover advantage. Second, data. They have huge amounts of data that's led to them being a payment efficiency guru at helping merchants. Risk modeling, which is key, right, for in this business, brand recognition, and then the talent of the founder. And I think when you combine all of this, it's led to the marquee positions right now. So people talk about Klarna and the competitiveness of this industry, but the marquee partnerships with Amazon, Shopify, Target, Peloton, Walmart, like this gives Affirm access to over close to about 15 to 10 million US consumers alone. So, and this is like the top four out of the top five e-commerce companies. Like when you think about this, the e-commerce market, the TAM is over $1.5 trillion e-commerce industry. Our firm has a partnership with four out of the top five, right? So just think about what that could drive in a firm's future growth sales. And that's the financials, right? That's what ultimately is going to drive the stock price, right? Think about the impact of Amazon's GMV, 29,000 merchants from Shopify, like over 20,000 merchants. Can you think about that? Like when we start seeing the revenue, the new products, crypto, debit plus, all of these things are going to huge growth over the next few years. And I think they're uniquely positioned to capture a huge market share in the North American market. So that's my high level pitch. Tech, data, risk, talents. That's a firm. So
Awesome, Francis. That was really in depth. And like I said, Francis has this thread that I've pinned here. So if you didn't hear the entire spiel here, or if you want to kind of learn a little bit more, I would definitely check this thread out. And like I said, I've recently bought a firm in the 130s. I actually covered it on Pounding the Table a couple weeks ago. So there's some more content there. But I definitely think Francis' thread is probably the best one on Twitter. So definitely check it out. Before we move on, I do want to ask one quick question. The products, right, Francis? And I think that's something that really excites me. Besides the partnerships, which I think was something that really caught my attention, especially when you see the amount of e-commerce they're going to capture when they combine the GMV volume that's going to come in from Amazon, Walmart, etc. All the new partners that they've kind of come on that besides Peloton. So that's really exciting. But the new products, I mean, I already know what's my favorite new product or feature, or whatever you want to call it. I think the debit card plus, which gives you the ability to link your debit card and turn in, I think, any qualifying purchase into buy now, pay later, even if it's not a partnered merchant, right? If I understand that correctly. And I think the coolest part about that is the fact that you don't have to delete your checking account. I mean, someone like, for example, someone like me, if you're using Chase and you have the Chase Sapphire Reserve, like the last thing you want to do is like leave the ecosystem if you have everything in one place. And I love the way Max is thinking, right? It's like about delighting the customer. So that's my personal favorite new product. I don't know if that's also yours, Francis, but I do want to hear from you, like out of all the products in announced on Investor Day, what are you most excited about? And if it's Debit Card Plus, just kind of add on, I guess, to that if you want.
for sure. Yeah, I mean, I think you hit the head on the nail. I think Debit Plus, I think right now they talked about having a wait list of over 1 million consumers already are actually on the wait list. Like, think about that. It's not even fully released yet, and you have that many consumers who are lining up for this product. I think it just tells you the incremental scale they could actually get. But I think that's cool. But actually, I'm going to go a little bit more techy in terms of my favorite solutions. And this is not, so maybe I will just give a refresher for people who are not aware. But like Affirm's new product line is, apart from Debit Plus, also includes a cashback and reward system for consumers, right? So similar to how you get a cashback with your credit cards or unique credit card partners, you actually have the ability to do that through a buy now pay later solution. So there's a cashback and reward solution that's coming out pretty soon. They have a fintech shopping app and a super app concept that they're actually developing right now as well too. So that's going to be huge as well. They have a cryptocurrency offering. You guys, I don't need to talk too much about those, but actually, I think the one I'm most excited about actually is the Affirm browser extension, and there's another piece called the brand sponsored solutions, and it's a crazy new concept of helping, let's just say, Amazon. So Walmart is an existing customer of a firm already, but if if Samsung, for example, wanted to use Walmart to actually advertise another additional product on their actual platform, you actually do have the ability to do that, but it's some unique technology way whereby Walmart could actually make some money off that, as well as Samsung could also make money off that. I'm gonna go into all of these into a new brand solutions, but I think what that solution will do is it increases the stickiness of merchants to remain with a firm. And I think that's going to be crucial going forward, just because of the competitive landscape. There's a low switching cost, you could say, that's going to happen within buy now, pay later going forward. And I think this new technology solutions, and going back to some of what I mentioned earlier, are going to be quite crucial for whoever's going to win this market, or whoever is going to, if you could increase the stickiness for both the merchants as well as the consumers, I think that's how you're going to win. And I think brand sponsored solutions and browser extensions are some of the new products, as well as Affirm's marketplace. They also have a marketplace where there's some really cool, exciting things that are going on there. So there's no time to go into a lot of these, but one thing I'll just say everyone is I'm actually planning a write up on Affirm. Like, I have a lot of data and I just want to dump it out into paper. So I'm actually going to be putting out the Substack sometime next week. I just hope my schedule allows me, but sometime next week, where I'm just going to go into, it's going to be super long, unfortunately, but I'm just going to go into all of this and I'll talk more about this brand sponsored solution and some of Affirm's technology unique value proposition on my Substack. So yeah,
Awesome.
that's everything.
Awesome. Thanks so much, Francis, and thanks for taking time out to talk Affirm. This has been awesome so far. This entire spaces, I've definitely enjoyed listening so far. And I do want to be, like I said, we're almost closing in on an hour, and we do have a question or two, which I think IMHO Coder 262377717. Shout out for all these numbers. I'll try to answer one of your questions before I move on, and the second one I'll give to Tony at the end. But about Affirm being an acquisition target, I personally don't think so. I would if I had to suggest to you, I would listen to Max Levchin. He's a founder of PayPal, right? So I don't know how much you know about Affirm, but this guy's a builder. He's a technologist. He understands financial services, probably one of the best financial services, like kind of managers or innovators, I would say, in our time. So I personally don't think this is something that MasterCard, for example, as you said in your tweet, is just going to come in and be able to buy. I think they have a long vision. They're innovating. They're partnering with a lot of different companies. They're releasing these new products. So again, you never say never. I mean, you see Pinterest today, and I personally am not a big fan of that acquisition, but this is not about Pinterest. I personally think Affirm is something that he is very passionate about. Like I said, he started PayPal, so this is a space that he's very familiar with and very excited to be continuing to build. So again, I can't speak on behalf of him or just what's going to happen from an M&A perspective, but I personally don't think so. And I do encourage you to listen to Max and his vision for Affirm, because I do think that'll answer your question a little bit. So yeah, Francis, anything else to add before I move on?
Just really quickly, I think on the acquisition front, I actually have a feeling, like, this is just a personal opinion anyways. I have a feeling they got approached either by a Shopify, because Shopify owns about what, 5%.
They own 10%. Yep.
About 10%, yeah. So they have an ownership. So that would have been a very easy conversion over into Shopify, especially when you look at Shopify's market cap right now, or even Amazon too. I think I personally think they were approached by potential interested buyers, but as you mentioned, knowing who Max Levchin is, I don't think he's the kind of leader who would ever like ever want to leave this company. I think he has a vision of how he's really building a firm through a technological lens, right? And yeah, I don't think that's actually possible, you know. So yeah, and I think I just saw a really quick question about interest rates being a challenge, and I know many people have talked about liquidity with a firm, but honestly, I feel the economic environment that we're in right now, consumer savings rate at one of the highest levels we've ever had them in history. And I don't see any of that posing a major risk to a firm or most of these fintech players probably over the next couple of months here. So
Awesome. Thank you. Hopefully, I was able to answer your question, IMHO. And before we move on, so yeah, I think we actually will move on, so not before. But I don't know how you follow this up, Riley, but you have a short time slot, which is about 5 minutes, and you're coming up after some of these monster names. But I will tee it up in the sense that Riley's very passionate about investing in small, kind of smaller names that have this growth potential or can become this next, known figure or known name. So, Riley, quickly, if you want, you can introduce yourself and talk a little about MQ before we wrap up.
Thanks, Rahul. Yeah, so kind of just gonna make it as quick as I can. 21 years old, college student. Basically, I've been investing for about 5 years, and I kind of focus on smaller companies. Even though Marqeta is a $14 billion company, it's fairly big for me at least. But I'm gonna kind of jump in real quick. So right now, the revenue from last year was about 290 million. They did 100% revenue growth, kind of just shooting out there. We got gross margins of 41%, and just kind of jump into this. Marqeta has been in operation for more than a decade, and they were founded by Jason Gardner, who's the sole founder of Marqeta. The company has its headquarters in Oakland, California. And so Jason Gardner is a very, very good CEO. He has a 96% approval rate and 4.5 stars on Glassdoor, for those of you who like to use that. So, he's pretty well respected. So jumping into it, so Marqeta is a cloud-based open AI platform. It delivers card issuing and transaction processing services for global money movement, tailored to the needs of developers, technical product managers, and visionary entrepreneurs at innovative companies. And so they did over 100% 2020 revenue growth, and they have 200% dollar-based net retention, revenue retention, which is fairly good. And so they've expanded into 36 countries, which is fairly good. And then they've also issued 320 million plus cards, which is incredible. And they've processed $60 billion in transaction volume in just 2020, which is up from 21 billion in 2019. So very impressive growth there. Marqeta is the first company to offer a platform for modern card issuing and transaction processing while being first to market with multiple issuing and processing innovations, including the first open APIs, JIT funding, and tokenization as a service, TAAS. And so just kind of jumping into these, API, which is the ability for customers to manage software applications hosted on MQ servers. JIT funding, which is just-in-time funding, automatically funding an account in real time during the transaction process, and tokenization, which is it allows merchants to delegate sensitive financial info and disguise the info in a more secure way, basically, meaning that there's no data leak. And so basically you could kind of look up what tokenization is if you really want to dig a little bit deeper into that. But explaining further into their product offerings, Marqeta has Marqeta issuing, processing, and applications. So issuing it enables customers to issue physical, virtual, or tokenized cards, which, like I mentioned before, has over 320 million cards. And that was as of March 21. So, you're looking at potentially 350, 400 million cards. Processing, so Marqeta's platform can process transactions with control and speed for the customer, which is very attractive for a lot of these merchants. And the applications, so using the platform, customers can leverage applications that cover the entire payment lifecycle, including development tools, program administration, fraud, and chargebacks. And kind of just for you guys to gauge whether or not this company is real. So just a couple customers led by Square, DoorDash, Uber, Affirm, like we just mentioned. And then we have Afterpay, which is now part of Square. JP Morgan, only a $500 billion company. Klarna, is that how you say it? I don't know. I don't like the name, but
I think it is Klarna. Yep.
I've always messed it up. But then they also have Instacart, Google. So MasterCard just started doing buy now, pay later, and they partnered with Marqeta also. And as a lot of people are, getting interested now because of the Coinbase news, because they're working with them, which I'll touch on in a little bit. But putting it simply, every company essentially is going to look to Marqeta at one point to use their card issuing platform. And if they already haven't, basically everyone will go to them. And just some, use cases for those of you who still might be confused, because personally I was a little bit confused even after reading that stuff. So when you receive money from your friend through Square's Cash App, modern card issuing helps move the funds to your debit card, making it instantly available for you to actually purchase whatever it is. And also when you're ordering food using DoorDash or Instacart, modern card issuing works in the background as money moves from the app to the delivery driver's payment card, allowing the driver to pay for exactly what you ordered and nothing else. So this is they've experienced the crazy growth because of COVID, and they will continue to get these new clients, especially, as more of these apps come about. But at the same time, DoorDash and Instacart, they're not going anywhere. Everyone's going to continue to use them. And so that's why, it's very nice to see Marqeta have these partnerships that they sign with through, 2024, 2025. And most likely I'll get to this in a sec, is that they're going to be renewed. And so just kind of diving into this cryptocurrency news from yesterday, Marqeta announced that it's powering cryptocurrency spending and rewards for Coinbase, which, as a lot of people know, is starting with they're doing the NFT marketplace, which will be huge for this. Also, you have Fold, ShakePay, and Backed. And so Marqeta has opened up new applications by allowing cryptocurrency to be spent at the point of sale, which it could see a huge adoption over time, given that 14% of the US population has crypto and 68% of owners are interested in crypto-based debit and credit card-based rewards. So basically, this is mining crypto by spending money, which is pretty incredible. And kind of just wrapping up here, the bear case, which a lot of people say is, this is the problem why I'm not going to invest in them, because they have 70% concentration from Square. If you rely on a company like Square, you must be doing something right. Let's be honest. Like everyone knows Square. Square's not going away anytime soon. They're probably going to be $1 trillion company, maybe more, whatever it is. That's the type of company that I want to rely on, not, a small 10, 20, $30 billion company. And also Square owns 1.1 million warrants and is signed through 2024. I hope, I don't think Tony's on here, but this is like having Messi on your team for at least the next 3 years. Marqeta has Marqeta, they do profit sharing with their clients. So, if Affirm, whatever it is, or Square, they essentially can share the profits as they get the transaction volume. So it's pretty cool to see them be able to work with these companies. And, the more transaction volume that you do with them, the more profit sharing that you're going to get, and it incentivizes you to, stick with Marqeta instead of going and doing it yourself or doing it by someone else. So basically wrapping up here, the company is a beast, and I can't wait to see what Citron's going to do and how they're going to drop their
fake long.
Yeah, whatever Andrew left is going to put together, it's going to probably move the stock. But there's a lot more there's a lot more that I'm going to cover here over the weekend on Pounding the Table podcast. So I'm going to try and cover, how they actually make the money with the interchange fees, more examples of these use cases, the optionality, competitors, and just a bigger deep dive into the platform itself. I just kind of wanted to make this as short as I possibly can, but kind of wanted to give some people a little taste of why I'm kind of invested in them. This is one of my bigger positions.
And with that, right, as Avi says, you're fired.
Yeah.
No, I'm just
gotta love it.
Awesome.
I did pretty good there.
That was
9
awesome.
minutes, I think. 9 minutes.
Exactly.
I ran through that like
slot.
crazy. I hope people didn't.
Yeah, you're not Brad Freeman or Francis. Come on. No, I'm just kidding. I shared Reilly's deep dive on Marqeta. Unfortunately, I couldn't give him too much time just because we have these bigger names to
Yeah.
focus on,
And the
still
podcast
kind
will
of
be
proving
good.
itself.
I hope this will be a mini monster. I think that's what I'm pushing for. I'm saying it's a mini monster, but who knows?
Yeah, who knows? Can you hear me? I don't know. I think I cut off
No,
for a second.
you're good.
Awesome. But yeah, no, thank you everyone. I think we hit like almost 500 people at one point. The people have been coming in and out though. But this was awesome. I think it was pretty helpful from my perspective. I asked, I think, some of the questions I'm sure others may have had. So I don't want to spend some time on Q&A, unfortunately. We will try to post a recording. I think I'm going to assign that to Avi. As I said, he's become an intern now. So I'll request it from Twitter, hopefully, and he'll get that out to you guys, hopefully, because I know a lot of people reached out to me about that. I want to take a moment to thank all the speakers. So thank you, Brad, Francis. Tony just had to jump literally. He had a prior commitment at 7. So like I said, we were trying to be strict on time because these guys all it's hard to kind of put together this many people at once. So thanks to Tony as well. We have Avi from Pounding the Table who joined as well. Hasn't really contributed, but he's the man. So and shout out to Pounding the Table for sure. I'll give these guys a follow. Produce some great content, like I said. Helped me very early as well in my Twitter journey. And without further ado, I mean, like I said, thank you. We'll try to post the actual recording, but I do want to give Avi 30 seconds.
I was just gonna say one more thing real quick. So we're as the intern, I'm super excited here. Luke Dene, I see you listening here too. So we just brought him on as well. Sorry, I think someone called in as I was talking. But at the end of the week, so every Friday, Luke's gonna do a recap. Sometimes he does it every day as well, but every Friday he's gonna be doing a market recap. So if you were not paying attention in the week, or you were busy at work or whatnot, Luke does an incredible job in about 15 minutes. Just gives you a recap of the week, which I think's phenomenal. He does a great job at that. And Rahul, you did an awesome job tonight. So thank you for stepping up, and I'm excited to see these hopefully weekly or bi-weekly.
Yeah, no, thanks, Avi. I actually have the next event in the works. Shout out to From Growth to Value, Chris. I'm not gonna spoil too much there. I'm just gonna leave it at that. But there are some exciting names that we want to cover with some additional speakers. So yeah, we'll try to do this between myself, the handle, just kind of bring on some more people that are covering some of these stocks that all of us own, but some spend a lot more time. As you saw, Francis, Brad, they all have these Substacks, as well as Tony's like an innovator. He talks on Pounding the Table. So I love hearing from people that know, are kind of the subject matter expert on specific stocks. So what I would suggest is feel free to comment on my feed or anyone's feed really here on tickers you want to know more about, right? I'm happy to kind of organize this. It's difficult because of schedules and trying to arrange the best time for everyone to work. I know a lot of people are in different time zones, but I'm happy to do it. And if it's helpful, that's the whole goal, right? That's what I said initially, right? We want to build this community of helping each other. The whole point of investing is so you can have that financial freedom and luxury to kind of do things you want in a financial friendly way. So thanks again, guys. And yeah, this was awesome. So I'm going to end it here. And thanks everyone for joining.